Good morning, everyone, and welcome to LeapMeet number 89, December 2022 trade log review and technical analysis. I appreciate you guys joining here on this very fine Sunday morning. So let's get started. So what I wanted to start with is start by looking at every single trade log that we have had over the last year. And as you know, we have been very consistent with providing trade logs and all that for past couple of years. Every day I write a trade log, every morning I write a watch list. Every month we do the trade log reviews. And there is a reason behind it. One, it's a habit, it's a consistency is as a habit that you develop. It's not something that you can just stay it. You have to act on it. You have to make it a habit and be consistent with it. And that is one thing that I am personally very proud of, because without consistency and discipline, it's very hard to be successful in any business, let alone trading. Anyway, and you all know why I am one of the biggest advocates for TradeLog. And the reason is, if you don't write down your trades, good and bad, there is no way you will know what you did right and what you did wrong, what's working and what's not working, what you need to improve on and what you need to consistently keep on doing. And that is one of the biggest benefit of doing the trade log analysis. I do it every week. We do it here every month, but that is one of the biggest benefit of doing the trade log analysis. So with that, let's get started. So I just want to just highlight some of the trades that we've taken, not just trades, but also not just some of the trades, but also the trade log review in itself. So like how well we did January last year. So in total, we took about 81 trades, wins were 71, losses were 10, so about 88% success rate. February, we had some really rough weeks, as you can see, where most of the trades we took didn't work. So that was a tough month. So would I be expecting something like this? Something like that could very well happen. And that's why we need to stay on guard. So in February, we took about 75 trades, a little less than like almost 80% success rate, which is still pretty good. In March, we had fantastic month, as you can see, a lot of green, very little red, lots of trades. Overall, 115 trades and 90% success rate. Come April, again, another fantastic month from the look of it. Very few reds, a lot of green, and almost 90% success rate as well. In April, May, again, as you can see, a lot of red and a lot of 100% plus win, as you can see here. That was a good month for us. Last May, 155, a lot of 542. Some very, very big trades we took, as you can see, multiple 100% plus trades. And the success rate was almost 91.5%. We only, out of 106 trades that we took, only 9 of them were failed. Every single one of them worked. Come June, another solid month from the look of it, 88% success rate, very close to 90% there. July, another month with 82% success rate. August, another solid month for us, 88, almost 89% success rate. September, another 88% success rate month. October, 83%. November, which is the last month, we had about 86% success rate. And as you can see, for an entire year last year, where everybody was struggling, where market was choppy, sideways, going lower, bear market, not bear market, and no direction, Ukraine war, this, that, so much things happened. But what didn't change was our success rate. We consistently averaged every single day, every single month, 80% or higher. And that is something that's phenomenal. And I, for one, is very, very proud of our track record here. And to close out the month, let's go over the December. As you can see, the first week was just 2 days, nothing big. Second week, we had another great week. We took there were days where it took about 8, 9, 10 trades and had like 300% plus trades on a daily basis, 100% plus trades on like every single day. We had at least 100% trade, except the first on Monday. That was a fantastic week for us. Come week 3, another great week for us, except this Wednesday, where both of the trades that we took failed. Because we didn't anticipate on such a fast direction change, we couldn't get out of it. So 100% loss. Another one on Monday that went to 0 as well. But to cover it up, we had about, let's just say, 300% losses trade, but at the same time, we had about 500% plus trades, with one being only almost 150. So that covers up for the losses that we took very, very nicely. Solid week, another week, week 4, another week that was fantastic. Two of the trades that we took didn't work out, but everything else pretty much worked. Thursday was a fantastic day with almost 400% plus trades. And then come week 5, that was the last weekend, last week before the holiday season began. And that's, in my experience, it has always been a very tricky week to trades. I used to, before we started TRADEORE, I used to just take a week off. I would just take a vacation from like 12/23. So starting from Christmas throughout New Year's, and I just wouldn't bother coming into the market. And a lot of people that I know do that as well, because it's very choppy. There is no direction, very little volume, not much is going on. And when you try to navigate through that kind of market, you're bound to take losses. And we did. We had about 4 losing trades in that week, but nothing big, nothing major. We still managed to, if you roughly take $700 position and take every single trade that we take, I know it's unrealistic, but if you do it, you would end up with 82. Now, with that logic, if you take only 50% of the trade we take, you should end up with at least $4,000 in profit every month. And that is what we are trying to focus on. That consistency is what matters, and consistently taking profit is what matters. And all in all, we took about 110 trades, 98 wins, 12 losses, 20 trades with 100% plus wins. So losses, we had more 100% plus wins than losses, and that tells you something. Total win rate, 89%. So fantastic way to close out the month, which the year for us has been anywhere between, you can consider it anywhere between fair to fantastic. It all depends on execution. On paper, everything looks great, right? And we have taken this trade in real time. But it's impossible for you guys to take every single trade. That's why you have to be selective. You have to know what your strengths are. You have to know what your weaknesses are. You cannot blindly follow anyone, because if you are following someone, like I always say, you're already one step behind. And what happens when you're already one step behind? You will be having a hard time being successful. Right, so you have to plan your own trades. You have to use our trade as a guideline where we enter. We provide levels to enter all the time in the chat room. We tell you guys when to stay away from the market, when to put the hammer down and get full advantage of everything that is happening, and all of that. All you have to do is utilize this information using your own strength. If you have a day job, then just focus on first 2 hour trading. Don't worry about what happens after that. Don't try to trade it from your mobile or try to multitask. It doesn't work. This isn't as easy as those influencer traders make it out to be on TikTok and YouTube. It doesn't work that way. They, in my opinion, bluntly, they are out to make money. If you, or if anyone for that matter, is making money trading, they would not bother to go around on TikTok and tell people that how easy it is. They are making money from your views, your clicks, and being an influencer. They're not making money from trading. Otherwise, they wouldn't be doing that. They would be telling people how hard it is, how you have to be disciplined, persistent, consistent with your trading, how you need to take it seriously and not as a side hustle or part-time stuff. It doesn't work that way. So if you hear anybody say that, keep that in mind. And that applies to a lot of people that pretty much everybody follow online, and that's what it is. And that's what basically makes people think that trading is easy where it's not. Anyway, we have had fantastic consistency. If you take lessons we try to teach and make it your own, use your strength. If you're good, if for example, if you're a jumpy person and who can't be patient, then focus on scalping. If you are someone who doesn't like to day trade, manage position actively, focus on swing trading. Do what works for you, and that's for you to find out. And one thing is for certain is that you cannot follow anyone blindly and hope to be successful. That's never going to work. Anyway, so let's move on to technical analysis portion of it. So this is the SPY, and this was the last week that we have had. As you can see, it's been trading in a range and keep on bouncing off of this 378, 380 level and consolidating sideways. On Friday, finally, it made a huge move, closed right at the 100-day SMA. As you can see, it failed at 50-day SMA resistance right here. So going into next week, this 394 level is going to be crucial. If it can manage to break out of it, then 399, 399, and then this trend line is going to provide a strong resistance. Over that and over 412, I would say we could see another bull run towards 432. I would still be very cautious, But if you guys are following me or TradeOre on Instagram or Twitter, then you would know that I on Thursday night, I posted a post saying that if this level continued to hold for maybe 1 or 2 more days, we could see a rally. And sure enough, the next day we saw a huge 700-point rally in Dow Jones, and all that's good stuff. Now this rally could continue to 400 before it loses some steam, but that's TBD. We'll have to see how that works out. But keep an eye on the levels I mentioned. On the downside, if it breaks below this 378 or I would say 376 level, then expect it to go back to 370. Break below that, we can start to move towards making new lows. What I don't want to see it break 358. If it breaks 358, 357 level here, then it's going to be tough for market to hold, especially in these conditions and what's going on with the recessions and all the job cuts. So we'll see what happens there. QQQ is weaker than Dow Jones or SPY, and mainly because it's all tech based, more likely Nasdaq. Another strong downtrend, as you can see, with multiple attempt to bounce. And that's what it did here as well, ran into resistance almost and pulled back to the new lows. Now but it managed to hold on to this 260 level. Now going into next week, we could see rally in tech towards 275, but 200-day SMA firmly moving lower, 100-day SMA firmly moving lower, 50-day SMA is kind of leveling out, but overall, tech sector is super weak, QQQ is super weak, break below 260, and we could see it pull towards 250, 450, and then 248. So be on your guard, especially when it comes to tech stock, which is what we mainly trade. Any questions at this point, feel free to ask, please. All right. Let's go to Amazon, another very, very strong downtrend. It did try to break out of this downtrending channel, failed big time. Just like this, another downtrend channel, like the bottom of it destroyed it, pulled back, and then got into the again. After very steep sell-off, it bounced, got back in this channel, and then started trading in channel again. Now we are at a point where seems like it's trying to base here, but overall, it's still firmly in this downtrending channel. Now it's the top of it, so we could see another pullback, so be careful. 50-day steep downside, 100-day, 200-day, everything is moving lower. And if you scale back and go, let's see. Right, I'm trying to zoom out. Let's see, this weekly. There we go. So when you switch it out to weekly, as you can see, this level right here has been providing support for this entire time back in October 2019. This is March lows. March low for Amazon is right here at 80.57. I would say, yeah, 81. Break below 81, and the next support doesn't come in until right here at 79.74. That's not too far from there. And the big one would be right here at 67. Can it go there? At this rate, it's quite possible. And looking at this steep downtrend, I wouldn't be surprised, especially if it breaks below 79. because at that point it will be below March lows, and from that point it could be all downhill. So we'll have to wait and see. My plan is to do just that, take it a day at a time, and not to worry too much about everything else and what's going on. But yeah, so 81 is the level I'm watching going into next week. If it breaks below that, I'm going to be very bearish on Amazon. If it managed to break above 90.50, then I will turn cautiously bullish, as I like to say it, because it might be turning around for a very short uptrend, I would say. Google back in this range, it was trading in this range entire, like pretty much till middle of the September, broke down. It started trading in this range again for a little bit, broke down, climbed up, broke down again, and we're back near the lows at 83.60, and this lows are from pretty much December 2020. So Google is holding a little bit better than Amazon. It's still quite far from September, March lows. For March, April, there you go. The March lows were at 50, so it's quite a bit away from March low, whereas Amazon is practically there. All right, so Google is holding much better. So if market changes direction, which stock do you think will run the first? Is it Google or is it Amazon? My bet would be on Amazon because, my bet would be on Google because that's the one showing strength here. So if market were to turn, then that's the one name you want to keep an eye on the upside for change in direction, moving higher. Sorry, I'm just doing a little shorting at the same time. All right, there we go. So yeah, but as you can see, this is the range from about 85 till 91 was the range. It traded from November all the way till January 15th last year. And then it broke higher and then broke higher and then broke higher. And we all know this pattern in Google where it consolidate for a little bit, break higher, consolidate for a little bit, break higher, consolidate for a little bit, break higher, consolidate, break higher, etc. And it's pretty much doing the same thing on its way down. It consolidate, break lower, then consolidate again, break lower, consolidate again, break lower, and then consolidate again. Now this range could consolidation range here could be from 102 all the way to 84. That's a pretty big range, but that's where it's been bouncing. So now, is it possible for it to hold on to this level and bounce again to 100? Absolutely. So going into next week, what I'll be doing is I'll be watching Google to break below 85 to turn bearish, or for it to break above 92 to turn bullish. So if it break above 92, I'll be super bullish on Google. I'll be taking calls. If it breaks below 85, I would say, 83, then I would turn very bearish on it because it has a long way down compared to Amazon as well. So there is more opportunity for it to move lower. Anyway, Shop has been pretty much in this range. As you can see, it's still in this range. Try to break out, failed, pull back, try to break out again, failed. This could mean that it could pull back to 30. Like I said, I've been saying this since last May, pretty much. No, sorry, last June, pretty much. Pull back, bounce, pull back, bounce, pull back. What do? Buy, sell, buy, sell, buy, sell, buy, and then you sell here, and then you wait for it to go down. So this is the equity trade that will give you easy money, $10 per share, which is fantastic. So I'm waiting for it to go back down to 30 to add more, and then we'll sell when it go back to 40. That's the plan for shop. Sorry, don't know what happened there. All right, Apple, I'm not really, Apple comparatively to other names is holding very, very well, as you can see. Like if you compare like March low, for example, Amazon already there, Google's maybe halfway, whereas Apple miles away, miles away. So overall strength is very much there in Apple. The problem when you're trading options is that it doesn't have that much of a range, except when it moves, it moves. Like for Friday, one of the calls we entered was 128 at 20 cents, and it went all the way to $2 by the end of the day, and that's 900% increase in the value of that one contract. So if you were to just spend 20, you would have walked away with $200. That's a fantastic return on your investment, but that doesn't happen every day, especially when it trades in this very, very small range. So on a day like this, day like this, day like this, you would lose money. But if you trade on day like this and this, where it's a huge range, it's possible to make money, but we can't know that for sure ahead of time. So you have to be very cautious with Apple. But going into next week, what I'm watching is 124 level. If it breaks below 124 level, then I will be interested in it. Give me a minute. What happened there? So yeah, if it breaks below this 124 level, then I will be interested in it. On the downside, it looks like it's holding. That's what it's been doing for past entire week, as you can see. So I'm not betting on it. If it breaks above 130, 150, 130 first, and then 130, 150, then I will turn bullish in it. Now, Netflix has been providing us with great trades. It almost did the break right here. It did the gap fill fantastically. We took full advantage of it. If you look at our trade log, we made good money off of Netflix. It failed there, pulled back to 280, pretty much 275 level, 274 right here. And then it's starting to bounce again. So I'm sorry, my bad. I'm very bullish on Netflix at the moment. And the reason being, I think the cycle of negative news is pretty much over with Netflix. Analysts are upgrading their targets, and as it continues to move higher, the analyst who has been lowering their price target will come out and say, oh, we changed our price target. Its new price target is this 400, 500, whatever. And that's good news for Netflix. So on Netflix, as long as it stays above 300, I am bullish on it. I will be looking to buy calls on every pullback. I'll be looking to buy calls on every level break on the upside. So that's my plan for Netflix going into next week. Watch for it to get over 320. If it manages to get over 320, then it can move very, very fast towards 331. So keep an eye on Netflix. Meta, we just started trading it again. Pull back 88. It's at 130 now. Fantastic move. But now it's at these 100-day SMA level. So wait for it to break over that. Meta, I used to trade a lot, but now I am very cautious with it. And this is like completely new stock with completely new business model and reality and price movement. So I'm very cautious on Meta. It is running into resistance, so let's see what happens. I may turn bearish on this name pretty soon, especially if it breaks below 124.32. I will be bearish in it for sure. NVIDIA, another name we trade, has been trading sideways with huge range from 140 all the way to 150. That's a $10 range. And it has been doing it pretty much entire week. So at this point right now, I'm pretty neutral in NVIDIA. It did close above 100-day SMA, huge resistance coming in for it at 154. If it moves over 150, I would say 150.25 on next week, then I will turn bullish in it. I will look to buy call depending on how the market is behaving. But overall, that's what I would be looking for. 150.50 is the level on the upside. On the downside, if it breaks below 145, it could pull back to 140 very easily. Tesla, I'm very bearish, as you can see. It's just getting destroyed right now. On Friday, it opened at 102, 103, closed at 113, which is a very good move for Tesla. But the thing is, with everything that's going on with Musk and how he's handling this issue, is not very good. Everybody's saying it's just not me. I liked the guy before. I don't like him anymore. But beside, I have no problem making money off of him, right? So what I want to see is for it to go back to 125, failed, and this time break below 100. I have been trading it cautiously. As you guys know, we have made some pretty great gains in Tesla, and we will continue to do so. I do need to do some more charting on this one mainly because it hasn't seen this level pretty much since August last year. And as you can see, if I draw more levels here, the support is right here, the resistance here, some support here, and that also acted as resistance. Some resistance here, 120. Let's see. It trades in huge range, which is fantastic for us. And any day trader, pretty much it's a very good news that it trades in such a large range. So let's see, this is some quick levels that I drew on it, and as you can see, kind of matches with what's going on. But this level 101.50 is an absolute, as you can see, it's double, it's layered over, and that is because that was the level it failed to break last time. It was here, it acted as resistance, and then it finally broke and took off. So as long as it's managed to hold on to this level, you can expect it to move higher. If it breaks over 115 going into next week, I will turn bullish on it almost until it gets to 125 and then see how it works. Break over that. I will like 134, 135, break over that, it can start to climb back towards 150. Possible, yes. Could it happen in a week? Probably no. But we don't care about what happens. All right, let me delete one of these because it's redundant. There you go. So what happens, we day trader, we trade what's in front of us, right? So it doesn't matter. It's crazy how exactly like 101.62, it aligned like right on top of each other. It's fantastic. Anyway, let me just see if I can. There you go. Yeah. So let's see what happens with Tesla. Also on high on the list, Microsoft pulling back again. Microsoft is another name that is very, very strong compared to all the other tech names. Nowhere near March 2020 low, but getting there. What I want to see going into next week is for it to hold 219 level, continue to move higher. If it breaks above 230, first, if it breaks above 227, then I would turn bullish into it for the time being and wait for it to continue to move higher. Breaks below the level of 122, then I will turn bearish on it for time being, and it can continue this downtrend. So I'm neutral at the moment. We'll see how it plays out going into next week. No steep downward movement in any of the SMA. It's mainly moving sideways right now, so it's very hard to get a read on Microsoft right now. So you just have to wait and see what happens with it. Anyway, those are some of the names that I wanted to talk about with you guys. If there are any other names that you want me to take a look at or do the chart analysis on, feel free to reply in chat right now, or drop it in the request channel, the chart analysis channel, and we'll be more than happy to provide the chart with it. All right, if there is no other question, we will go ahead and end this webinar here. Thank you again, everyone, for joining today. We appreciate it, and I will see you in the room. Have a great day, everyone.